But G Shipping reported a strong set of earnings as well. Stellar growth in the shipping business and the offshore business. Also saw a turnaround as contracts have been renegotiated. G Shivakumar, who's the Executive Director and CFO at G Shipping, joins us now to talk about that. Mr. Shivakumar, thanks a lot for joining in. Can you tell us, how are the prices in the ocean freight contract market? How have they fared? I understand that in Q4, despite it being a traditionally weak quarter, you still fared quite well. So tell us what the outlook is.
Morning, Sonia. Thanks for having me. Q4 is traditionally a weak quarter for dry bulk only. Tankers are traditionally quite strong during the winter. And tankers continue to be very strong. Of course, that's 4 quarters of great strength, which has been seen in tankers ever since the war started in Europe. Dry bulk was weak as we had expected, and that's seasonality. It recovered towards the end of March. It's a little better now. Dry bulk is a little better now. Tankers continue to be strong, and except for the normal. And here there's seasonality kicking in, which is Q1, Q2 of the financial year are typically weaker for tankers because of refinery maintenance, etc.
All right. Good morning, Mr. Shivakumar. The order book as a percentage of fleet, that remains low, especially for crude tankers. Does this mean that we are in for a good couple of years? Because some of these ships, even if they are ordered today, it'll still take a few years. So is that the broad direction?
Yes, from one point of view, from the supply side point of view, it's very good. You still need demand to pick up. So what we're saying is that at 2.5%, so the crude tanker order book is 2.5%. Basically, we are talking of about 1% growth per year going forward, gross. And if demand grows by more than 1%, that means you've got a tighter market. And that's what it means. The question is what happens to demand. We've seen oil demand not very strong, especially for gas oil, which is diesel, and jet. Jet fuel hasn't even come back to the 2019 levels. While it's recovered from 2020 and 2021 levels, jet fuel is still 1.5 million barrels per day below what it was in 2019. Maybe if that comes back to normal, then you would have really strong oil demand growth.
Mr. Shivakumar, good morning. Prashant here. I mean, FY23 has been fantastic, right? Revenues went up 70%, EBITDA went up 120%. How was FY24 looking? Give us a broad way to think about this. I mean, surely these growth rates will come off, right?
Yeah, so growth is sort of unlikely, I would say, from previous year. Because the critical thing which happened is there was an event which led to a step change. And that event was the war, which resulted in a change in trade patterns, resulted in an increase in ton-mile demand, which then took rates up, tanker rates up. So you're not going to get that event again, the event-linked change in markets. So what we are looking for now is smart improvement in oil demand. As I mentioned, jet is a big thing.
Mr. Shivakumar, will we see, possible we see, compared to the very elevated FY23 levels, 10-15% fall?
We don't know.
In 24?
We don't know. Currently, markets are weaker than they were in Q4 for both crude and product tankers. Again, that could be seasonality or it could be a symptom of poor demand for oil. We know that demand for oil is not great because refining margins also are pretty poor. We'll have to wait and watch to see what happens during the winter. And as this market develops, in the next couple of months, you will get some idea of the direction of the tanker market. On dry bulk, it's completely China dependent, really.
Can you tell us in terms of your, return ratios, whether it's the ROE or the ROCE? In Q4, you saw an ROE of 28%. The return on capital employed was about 21%. Are these sustainable? Can you improve them further? Can you just give us some guidelines?
Improving them further is a bit difficult unless rates go up a lot. Our capacity is not growing. Has not grown, is not growing. And the base is has gone up, right? The net worth has gone up, the capital, because of the profits that we've had. And unless we get more ship days in, or you get more dollars per ship day, it's not going to improve from there. So we need to be able to invest at some point and increase our capacity to get that, or you need the market to give you higher rates. And those higher rates could happen, and that's going to be dependent on oil demand finally.
All right,
Yeah,
Mr. Shivakumar, you're in a bit of a tricky situation actually because you're debt free. Your stock, price currently to NAV is around 0.6. Now, since you mentioned, I think on the con call that buyback, well, it won't be the best option because of the taxation. What do you do now with the cash you're going to generate? Buy more ships, which are at elevated prices, or continue paying out big dividend? That's something that your shareholders would like to know.
That's it. So it is, yes, it's a problem, it's a vexing problem, and it occupies a lot of our mind space. Yes, buying ships now doesn't really make much sense. We'd like to make decent returns whenever we put our money to work. We've seen in the past that even if you hold on to cash for 2 or 3 years, you will get good opportunities to buy, and it's better to wait with that cash rather than be in a hurry to deploy that cash. So we're not stressed about it. We would like to have had more ships and less cash, but eventually we will be fine with holding on to the cash for more time or paying dividends, as you mentioned, and just waiting for the right prices to buy.
Last year, you paid out your dividend payout was 16% of EPS. You would like to maintain something like that. 28 rupees is what you paid out in absolute terms.
Yeah, so this is again going to be decided by the board on depending on the conditions at the time. But you'll see in the last 3 to 4 years, it's been between 15 and 20% in general. So you can see the trend.
Okay, all right. We will let you go on that note. Thanks a lot for joining in. Appreciate your thoughts. Have a good week. That is GE Shipping.